In this video, I'm going to be doing conceptual framework. Now, the first thing that you do in conceptual framework is called the qualitative characteristics. Now, in this video, the first video, it's going to be about the fundamental qualitative characteristics. So anytime they ask you this in a question, you give them these two fundamental qualitative characteristics. But if they ask you to explain, you have to give each one of them a explanation. Or you might need to match them with a case study, right? Like they might ask you a journal entry, and then you must give the type of accounting qualitative characteristic, right? Now the second video which I'm going to make is the enhancing qualitative characteristics. So you don't get confused between the two. So starting with number one. Now to remember this, the acronym is for real FR. Okay, FR. F stands for faithful representation, right? So the first one is faithful representation, right? So faithful representation. Now, what is faithful representation? So when doing faithful representation, there is, let's see, faithful representation. There's three. So there's three things that you can talk about under faithful representation, right? The first thing you can talk about is free from error. So what does free from error mean? So free from error. Well, free from error means that there must be no deliberate mistakes. Now in financial statements, there can be mistakes. That is why you hire auditors and so on to check the financial statements. But these are called deliberate mistakes. So do not make deliberate errors. You as a business need to make sure that you minimize the errors in your financial statements. The second one is complete. What does it mean, complete? Complete means all your financial statements should be complete, right? Don't miss out anything. If you look at all your previous financial statements from the previous year, make sure it's the same as those statements. Make sure all the accounts you had last year, you have this year. Do not just leave out, for example, a stationery account in this financial statement, just leave it out. No, it must be complete. It must be completed with all the accounts in the business. Third one, it's called neutral. So another name for neutral is unbiased, right? This means when the financial statements is being represented, right, or being made, it mustn't be biased. So if it's made by the owner, the financial statements, that can be biased, right? It's not neutral because he can, I don't know, do some stuff for those financial statements, manipulate it, do bad stuff. So yeah, that's that, right? So whenever they ask you to list the fundamental quality characteristics, you can just say faithful representation. If they ask you to list and explain, you mention these ones in yellow. Right, perfect. So let's do the second one, right? Now, faithful representation is number one. The second one will be relevance. So relevance. Now, under relevance, there's only one thing to explain, and that is called materiality. Now, materiality is extremely important. Materiality you'll do in your whole accounting career, literally. So what does materiality mean? So now this should mean smaller, right? Materiality, because this is a subtopic of relevance. Relevance is the main thing. Materiality is under there, but yeah. So what is materiality, you may ask? Now, if you as a business make financial statements, right? So you got your income statements, your balance sheet. There's a lot of work that goes into those statements, right? You have to make accounts, make numbers, and so on. But some accounts in your financial statements, they do not need to be represented separately. What does it mean? So let's say in this financial statements you have stationery expense for 150 rand. Then you have, let's say pens for 200 rand, and all these are expenses, right? And then you have, let's say what can I say, let's say stamps for 50 rand. Materiality says that these items are immaterial. Now, what is immaterial? What is material? You can see how small these numbers are, right? So according to the conceptual framework, it'll say, listen here, there's no need to put stationery, pens, stamps in, literally write them as separate accounts. Make one account and put all these three numbers in there and call it one account. For example, we can put all these three accounts, this account, this account, this account, into an account called, let's say, consumable stores, consumables, and put the full amount, 400 rand. So now this is material, right? So basically what it's trying to say is all these items here, it won't influence decision making, right? If I, instead of putting three separate accounts like this, I just put in one account, will it affect my decision making in the business? No, this won't help the decision maker here. It's two less amounts. However, if your stamps was, for example, 50,000, 5,000, then 100% it will affect it, right? Because you need to know, stamps 50,000, that's a lot you have in your business. So now you have to like only put these two together and leave that out, because now this is actually material. It's actually worth having a separate account. So in summary, that's materiality, right? Also, if they make you discuss relevance, you must say that in your financial statements you must have items that influence decision making, right? Do not include stuff in your financial statements that won't affect decision making, right? So you can leave stuff out in your financial statement that doesn't, that if you left out or were there, does not influence decision making. Like for example, this: if 150 and 200 is put in separate accounts and taken out and put in one account, it makes no difference, right? So yeah, that's also it. Also, sometimes they give you a question. They say you have 5 rand worth of stationery. Will this be an expense or an asset? Some may say expense or an asset, but according to this conceptual framework, materiality, you can have it either too. Because if it's an asset, it won't affect people who are decision makers. If it's an expense, it won't affect people who are decision makers, right? But mostly stationery is asset until you sell it, right? I mean, until you use it, then it comes expense. But yeah, if it's too small the number, then it doesn't affect decision making. The accounts do not matter really. You still have to put in the financial statement as an account and make the number in there, but not separate accounts. So that's it for fundamental quality characteristics. They say list. So remember, I'm emphasizing this very important because I don't want you to put these things in here when they say list. It is correct, but when they say list, they want this. Okay, so if they say list, you put faithful representation, you put relevance. If they say list and explain, or explain the fundamental quality characteristics, you'll say faithful representation and mention this thing. This is 4 marks, as you can see. You do this, you can get 2 marks each year, 4 marks. So that's how you do fundamental qualitative characteristics of financial information. Don't forget to like and subscribe for more videos. First year students.